JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 25th of January 2020. So yep, welcome everyone. Welcome to the last week of January, guys. So yep, I hope this month has been a kind one to you in terms of trading. So yep, I hope. Yep, that was the case. As always, guys, this morning we'll have a look at some of the instruments, some of the instruments that we looked at last week, just to see maybe what to expect from them this week. But yeah, before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, guys. The first one I want to pick up here is Nikkei 225. Just a quick update. We continue to trade above these some of these upside lines here. To be honest, all of them are kind of tentative still, so but I'm gonna keep those on the chart because at the moment, yep, the index is balancing above all of them. So in other words, for now, from the very short-term perspective, what I'm keeping an eye on here are these two upside lines. One's taken from the low of the 22nd of December, and the other one's is taken from the low of the 30th of October. So these two lines here, I'm gonna keep an eye on them. But the most important thing here is that, for example, this index this morning pushed higher. Well, that's great news for the bulls. However, it didn't really climb above the current highest point of January near the 28,980 territory right here. So I need to see that break above this barrier first before we could get a little bit more excited with the upside. So in a way, some of you might even say that, oh, maybe it's actually forming a possible kind of ascending triangle here. If you draw another upside line here, to be honest, like this, I mean, then yeah, maybe something like that could be possible. However, given that we already had quite a decent rally here, and looking at our oscillators here, for example, the RSI, which is kind of moved back below, slightly below that 70 mark right here, and the MACD, which started kind of slightly pointing lower. So that's why I'm going to be very careful on this one. If it breaks above this 28,980 zone, then yep, that's wonderful. I'll start aiming for some higher levels. But if it doesn't, if it struggles to do so, maybe a bit of a corrective move here, or lower could be possible, at least towards one of these upside lines here. Now jumping into the German DAX, and the index had an interesting week last week. So on one hand, it kind of did try to push higher, and you can see that on Thursday, for example, the index did pop above that downside line. Initially it kind of opened above it, but it still ended the week below this downside line. Now, if we take a look at the cash index right now, we can see that the price is currently balancing near the 13,931 zone. So basically above Friday's close, but below this 13,940 zone, but above this downside line. So what we can say here is that we can get rid of this downside line, no longer valid. It got violated as well. So yep, we can remove it, and because the price currently is hanging just slightly below that 13,940 mark. Now I'm going to keep an eye on that one. If we get a nice push above it, then I'll aim for the the high of last week. Let me just quickly mark that on our chart here. Let me just, it's in the way. There we go. So the high of last week was roughly around the 14,026 level. That's going to be the next target here if we get a push above that 13,940 mark, and then we'll take it from there. In terms of the downside on this one, I would need to see a drop somewhere below this area right here, the 13,795 zone, because that's the high, the highest point of February of last year, and also at the same time, if we get a drop below that level, we would get also a drop below the 21-day EMA, and maybe some sellers could see this as a good opportunity to step in. Now jumping into EUROSTOXX 50. I haven't looked at this one for quite a while, but it always presents itself with nice opportunities. So long story short, yeah, you can see that until I didn't kind of put any lines here, we can see that we are still trading above the 21-day EMA, comfortably above this one, or should I say slightly above this one, but comfortably above the 100 and the 200 EMAs. This 21-day EMA so far seems to act as a nice area of support, as you can see here, but lately I would say from the kind of the beginning of January, you can see that the price is kind of moving a little bit sideways, roughly kind of like that. But at the moment, probably the best thing to do is to wait for a clear break, because as you can see last week, for example, we did get a push higher, but it came close to testing that current highest point of January near the 3,658 mark, but it excuse me, it failed to kind of let's say test it and reversed back down. However, as you can see, the index remained above this hurdle, this 3,573 territory, which is marked by the low of the 15th of January. Excuse me. So in a way, if you want to aim for some lower levels here, guys, wait probably for a drop below this level, and then we could go get a little bit more excited with the downside, and we could start aiming for the current lowest point of January here, which is roughly around the 3,524 mark, and then yeah, we could take it from there. For now, it is how it is. So for now, I'm going to keep an eye on these two levels, and yeah, we'll take it from there. Looking at the cash index right now, we can see that the price is balancing near the 3,614.15 level, so we're above Friday's close, but we're nowhere kind of near this 3,658 territory. So I'm gonna wait until I get a nice good pop above that level before kind of examining higher levels. Now jumping into DXY, the dollar index, and here, as you can see, it continues to trade below this downside line here, drawn from the high of the 23rd of March. It trades currently below the 21-day EMA, which also could be seen as a bearish indication. However, as I mentioned to you guys last week, if you remember, for me to get excited with lower areas, I would need to see a nice good drop here below this 89.96 level here, and then yes, lower levels could be met. But at the moment, yep, it is how it is. So I'm waiting, I'm playing the waiting game here, and for me to get excited with the downside on this one, I would need to see at least a nice good strong move below this 89.96 territory. If I'm not getting that, for now I'm taking a bit of a careful approach. For the upside, well, I mean, I'm still waiting for that break of this downside line, and then yes, higher levels could be met. Gold is drifting lower. So far, this idea that I talked about in the beginning of last week is kind of working out, where I was saying that if it pushes higher but fails to move above this downside line, then yep, a nice good slide here could be possible. So for now, excuse me, for now I'm aiming for that 18-19 level, but of course if that gets broken, this would also place the price below the 200-day EMA, and well, maybe more sellers could join in here. But At the moment, guys, be very careful with the upside in order to get excited with some higher levels. Well, personally, I would prefer to wait not only for a break of this downside line, but also for a push above this 1907 territory right here. And then I could get a little bit more excited with the upside. For now, I'm just being very careful. Just being very careful here and waiting for kind of this one maybe to make its way towards this 18-19 level. But again, at the same time, like I said, I'll be very, very careful. Now jumping into WTI oil. So excuse me, guys, for my voice a little bit going down here. Hopefully that kind of clears up a little bit. So yeah, WTI oil. With this one, so last week I talked about this commodity here, and I was telling you guys to keep an eye on this upside support line drawn from the low of the 2nd of November. As you can see, it pushed a little bit lower here. Almost came very close to testing this upside line, but to be honest, we'll take that. It's kind of a it kind of did the trick here, and in a way it seems that there is a chance for now for this commodity to push nicely to the upside here. But let's not get ahead of ourselves too much. First, let's wait for maybe a break above this 53.90 level, just to be on the safe side, because, and the reason why I'm saying that is because I don't want this to be becoming a potential kind of range here. So yes, we are trading still above this upside line. However, if this upside line gets broken, but let's say the commodity struggles to move somewhere below this little area of support here, which is roughly between the 51.53 and the 51.78 levels, that could prove, like I said, that could prove that the commodity wants to stick around here just for a little bit longer, maybe in this little range, and kind of move sideways. So keep that in mind. Yes, for now at this point in time, it seems that yes, it could go higher here because we're kind of reversing from this upside line. But don't be surprised, for example, if we move higher, we fail to move above this 53.90 level, then we reverse back down, break this upside line. This is when a lot of probably sellers could start getting excited. But if it struggles to move below this hurdle right here, the support hurdle, well, I mean, then we could see this one reversing back up again. But again, this is just one of the ideas for now, guys. Like I said, long story short, and to keep everything simple, these are the two areas that I'm keeping an eye on. For the upside, I need to wait for a push above the 53.90 level, and for the downside, I need to see a drop below the 51.53 territory. Bitcoin. So now this one's a mess. Yes, we broke this triangle. In a way, everything's kind of leading now towards the downside, and to be honest, I'm kind of sticking a little bit more towards the downside, because at the same time you can see that the price here is still balancing below, or just trading below the 21-day EMA here. So yep, I mean, that's kind of putting a bit of pressure in the bull block. So in a way, guys, we can first of all get rid of the lower side of this triangle, and we can keep this downside line. So basically, in other words, we might be getting now a slightly bigger triangle formation here. I mean, not an ideal one, but yeah, nevertheless, I'm going to keep that for now. But in other words, I mean, you could keep an eye on these just two lines here, two trend lines. So the downside one, short-term downside one, taken from the high of the 8th of January, and the medium term, still short term, still short term upside support line drawn from the low of the 19th of October. And let's see how, of course, this is going to play out. From the very short-term perspective, there is a chance for this one to drift lower. So in a way, how we could look at this one is, if even the price pushes above the 21-day EMA, it has this downside line here, which could kind of provide resistance, and we could push the crypto back down. But if this downside line gets broken and the price climbs above somewhere above this the high of the 19th of January here, near the 37,940 mark, actually 37,937 territory. Now that's where it could become a little bit more exciting for buyers. AUD and ZD jumping into a few pairs. Oh, by the way, in terms of the economic calendar, guys today, it's quite quiet today, and to be honest, not much happening. We do have the it seems, according to this calendar, we do have the German IFO business climate index coming out around this is like 11. I think it's 11. No, sorry, and that's going to be 7 o'clock. 9 o'clock GMT time. And that's kind of it, to be honest, in terms of kind of data, economic data here. So we'll keep an eye on the whole kind of political situation in the U.S. and the kind of China-U.S. trade talks and relations. I mean, those probably might start picking up, or should I say, jumping back into center stage at some point. So keep your eyes on the Australian dollar and New Zealand dollar, and if those start worsening, then, well, I mean, this could have very like a negative effect on the Australian dollar. So yeah, let's see how that's going to play out. But and also, of course, keep your eyes on the whole kind of vaccination process. So that's what's really kind of driving the markets lately. So coming back to the pairs, coming back to the instruments, you can see that for example, this AUD and ZD here is drifting lower. So after the pair kind of broke this upside line last week here, it also drifted below this 1.0759 territory. I talked about this, guys, and I was saying that for me to consider the downside, I need to see a drop below this hurdle, and well, that's what I got. So I'm kind of now leaning more towards the downside, and my next target is going to be the 1.0669 territory right here, and then I'll take it from there. So for now, everything's looking quite let's say negative for this pair. Jumping into USD CAD now, here you can see a nice reversal back down. I talked about this pair last week, guys, and of course you can see that we're still trading below some of these downside lines. So the bigger one here is the more medium term one. It's taken from the high of the 19th of March of last year. So if you want to aim for some higher levels, well, probably wait for a break of that one. But from the more of a short-term perspective, you can see that we're also trading below this other short-term downside line drawn from the high of the 21st of December. Which so far is acting nicely here, kind of doing its job. However, we cannot really talk about lower levels until we get that daily candle staying below this 1.2630 territory, because as you can see, last week, for example, we did get a drop below this hurdle a few times actually, and but the daily candle kind of failed to stay below it. So makes a kind of perfect sense, I mean, to wait until we get that daily candle staying below that area, and then kind of maybe start getting a little bit more comfortable with lower areas. But at the moment, it is how it is, guys. I mean, yes, we might see this as a potential descending triangle here. Of course, all these triangles tend to break to the downside according to all the TA rules. But until we get that break, we cannot really talk about or should I say, we can talk about it, but we cannot really get comfortable with that idea. So yeah, wait for that one, guys. Wait, it could present itself with a nice opportunity here, but we just have to wait this one out a little bit. Wait for that nice good break. GBP CHF, very quickly on this. Now, last week I talked about this this rising wedge pattern here, which so far is kind of working out nicely. So I talked about kind of this rising wedge here with I ignore the two lines here. Probably I'll have to get rid of one of these, for example this one, and stick to this slightly wider one. But nevertheless, the idea still is here. I mean, yes, these patterns tend to break to the downside. However, as I mentioned to you previously, that until we get that break through the lower side of this pattern, we cannot really talk, or we cannot really get excited with lower areas. In addition to that, I would also like to wait maybe for a drop below this 1.2055 territory right here, because at the same time here, I mean, it would place the rate below the 21-day EMA already, and maybe more sellers could see this as a good opportunity to step in. But as long as it stays inside the pattern, it still has a chance to push higher here, make its way towards the upper side of this rising wedge, and that's why, guys, don't rush into anything. Yes, it is a bearish pattern. However, until the lower side of it is broken, we cannot really aim for lower areas. And finally, EURUSD. So this one is and the difficult one, I would say. On one hand, yes, it is trading above the 21-day EMA. It's trading above the 1.2158 territory here, let's see how the dollar index is going to perform today as well, because again, if that starts pushing back up, then maybe euro dollar is not really ready to go higher yet. But given that it's still kind of hanging near this 21-day EMA, I'm going to be very careful, because it does have a chance to drift lower. But if it pushes above the 1.2210 territory right here, which, as you can see, previously acted as a very nice area of support, then resistance, if it climbs above this area, then yes, my next target is the current highest point of January near the 1.2350 level. So guys, I'll have to wrap it up here. So I hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate your time, guys. I really do. Thank you very much for that. If you want to catch my video later on, my trader's tea time is always 14:15 GMT. For now, guys, have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.